stages, providing resources to them to grow quickly and to provide them sort of the runway to become hopefully a big tree with lots of seeds in terms of spawning maybe other startups over time. So as Ray mentioned, we're one of the top performing funds in the U.S. That gets involved at the early stages. What we really focus on as a fund is really being almost founding capital in many cases. We're usually the first money in to a lot of the companies that we help start or help fund. And we're focused generally on the hardest part of the equation, especially in today's environment, which is what I'll call IP-based or real science-based companies. And so, again, a good fit for us for this region in particular. Most of the folks in the U.S., and even as we look at other funds here in Europe, are chasing the next Twitter or the next Facebook or the next Google or Uber or whatever, software and services-oriented companies. And we're really focused on companies that have to build real products. And so it's, I think, a lot more work in general, but ultimately the kinds of companies that we're backing do have this opportunity to be really international players from day one. What we see, even in our U.S. companies, is their first customers, in many cases, almost every case I can think of in our portfolio, was not a U.S. customer, was an international customer. And the first corporate investor in most of our companies were international, not necessarily U.S. companies. So we really look for opportunities that we think immediately have global impact potential, and we quickly try to work with them to realize that potential. So what's unique a little bit is, again, we're getting involved at the very beginning. I think one of the things that's underappreciated, and one of the things that we're trying to bring to this region is, and this is true in the U.S. as well, is you really need more capital even at the very beginning stages. And so a lot of companies get started with the informals or seed capital rounds of $200,000 to $300,000, or even government funding sources for $200,000 or $300,000. And that can help you with your product, but doesn't necessarily help you build a company around that product. What you really need ultimately is management that understands how to present the opportunity to the corporate customers. And that's usually not the scientists. So they know how to build the product. We've yet to have a company that couldn't build the product around the technology that we were investing in. But selling the product and building a company are two different things. And so getting in experience management is critical. People are always the key to success. And with $200,000 to $300,000, you generally can't add to your team. With $2 to $3 million, then you can maybe recruit some experience management, really start to think of yourself as a real company, and we'll go into a little bit later how we open doors. But when we open doors, we have to hand those introductions over to somebody who can follow up on them. And again, so that's usually not the scientist. They're focused on building the product. So you need the management. So we get in early, we put in more money earlier than is normal, I think, or generally accepted. And I think that's ultimately the key to our success, is really having more money, being able to recruit a key business experienced person, spending that money wisely because they've done it before, they know how to build value, they know how to position the product in the marketplace. We're actively involved on the boards, and we're having success, as you heard earlier. Our current fund in the U.S. is about 4x increase in price or value over cash, from a cash-on-cash basis. And the prior most successful fund in New Mexico was maybe 1.5x. So we're doing much better, and this was true in the Southeast, where I originally started in the Research Triangle Park. We had our fund there did about 4x cash-on-cash, and much better than the average. And I think it's because of the way we look at what we're trying to do. So this just highlights that. We really specialize on, like it says here, under-resourced regions. And so I started in this business in North Carolina, focused on the Southeast, and then moving to New Mexico, focused on the Southwest. And you see here, and we think, a lot of what we have done and the way we approach this can be transferred to this region. And in fact, as I mentioned earlier, in our minds, ideas are plentiful, and they're everywhere, and they're certainly here. What's not plentiful is capital and management. And what we try to do, in many cases, even in the U.S., the best ideas feel like they have to move to Silicon Valley, or they have to move up to Boston to be successful and attract capital and attract management. We really support companies where they start, and we recruit the resources to come to the companies. And so I think that's a fundamental difference in our approach, that we find the ideas in the regions that we're in, but we help build the companies there where they can stay there, where we can be their anchor tenant or supporter, if you will, and then be a magnet for recruiting other resources to the company. So I'm going to flip through this in the interest of time, but you know, again, in our minds, there's kind of three big things. The ideas, people that are in the idea business always get upset with me when I say the ideas are the easy part. But truly, there are ideas everywhere, globally, and more now than ever before. The key is getting those ideas connected to the resources they need to be successful, and that's what we try to do. So ultimately, we look, as I mentioned, for companies that we think have the potential to be category leaders. We're doing that across a number of industries. And I think one of the biggest things we do, and it's been mentioned with the corporate ventures firms, but they are more active than they've ever been. They're willing to talk earlier than they used to talk to companies, particularly because most of the people in my industry are not doing the hard tech type of deals. They're wanting the software services. So the corporate venture folks are realizing they have to get in earlier. They can't depend like they might have in the past for the venture community to find these new technologies and build companies, and they can just come in and buy them for strategic reasons once they have customers. And so opening these doors is critical, I think, to the success of our companies, and these are, you know, a subset really of relationships that Ray and I have built over the years and have access to, and actively use these when we're evaluating opportunities, and then of course actively use them once we've invested. So this is just a good example, a company in the U.S., and this is just a small subset of relationships that we're trying to bring and have brought to this company. And you can see Denso on here. You can see the black box represents Caterpillar. They don't like their logo used, overly used, but in any event, they're now investors in that company. We think we can bring this to the Netherlands, and so Clearflight is here in the audience and is presenting later, but again, we've opened a lot of doors for them. They've opened a lot of their own doors, and we try to support them in that. And so ultimately, we see success through building the network that these companies have access to. And ultimately, if you have a really solid product that's unique, has unique benefit to the customers, but how do you get that in front of the customers in the right context? And that's really what we try to help with. So I'll stop there and turn it over to whoever's next.
Great. So I guess we'll just ask any questions now. Does anybody have any questions right off the top of their head? Because again, this is the American view. The great thing about this panel is you're going to get different perspectives from different regions, different segments, corporate, angel, and anybody have any questions right now? Perfect.
Yeah. Or you can shout. There you go.
So what if you're a software-based company from Amsterdam?
Well,
You're in trouble.
actually, I think it's the opposite. I think you're in luck. I mean, 9 out of 10 venture firms are looking for software ideas. I mean, that's really where most of the industry is headed, is they want to find things that can scale quickly. Software can scale quickly, a lot less expensively than hardware. And so you're in pretty good shape if you're a software company with a good idea.
And let me just add on that. So our investment partners as well are looking for content, are looking for software also. So we're able to connect the dots and bring you to their corporate venturing group and make those connections also. Unless it's really IP driven, then we would like to hand it off to the other guys. And there we go.
There you go. You catch?
Oh no.
Oh no.
I don't know if we got a plant in the audience.
Well, as a venture capital fund with a focus on hardware, what do you need beyond an idea? What steps do you need to take before a hardware startup approaches Cottonwood?
Well, honestly, as I mentioned earlier, for us, and this is not true for a lot of funds, for us, we do get involved almost as founding capital. So in terms of approaching us, we're willing to talk to folks. One of our investments here at Twente, Eurokite, we pulled right out of the lab. I think you told us that we were the first ones to ever do that. So we found the technology, we worked with the inventor to create a business case for the technology. We then recruited the capital in and have begun curve. So things that most technology is incremental to what's already in the market. It's a little faster, a little cheaper, slightly different approach maybe, but we look for things that really leap off the curve because it's a totally new approach with very little prior art. And then if we find that and we think it can really address multi-billion-dollar markets, then we're going to be interested. And then we will help really pull the business plan and the other resources together for those ideas.
Great. Thank you, Dave.
Thanks for the question, David.
Next, we have Luigi Amati. And so the perspective here is interesting. One, an Italian investor focused with a lot of time in Brussels. Two, starting with the informal investors and then aggregating that up and producing your own sophisticated model for managing that. And so,
Thanks very much.
yeah, looking forward to hearing.
Thanks, Ray.
For sharing that.
Good morning to everybody, and thanks for the introduction. My name is Luigi Amati, and I come from the company Meta, which I started now 23 years ago, and I'm also here as the Vice President of Business Angels Europe. Just a couple of words on both organizations. Meta is busy with technology transfer. We do work with a lot of research organization, researchers. We are the framework contractor for the whole of the Horizon 2020 program on behalf of the European Commission. So if you have such a project funded by Horizon 2020, chances are that we will meet soon. We do about 200 exploitation services for research projects every year all over Europe. We are also busy with ventures, and as Ray was mentioning, we have been building a model for co-investing in between public funds which are available for venture capital a little bit all over Europe, together with angel groups and business angels investors. We have so far invested over 100 million euros in over 100 companies. And we just presenting one new fund to our investors. So I was just making the calculation recently. I mean, we have a 1.4 return on a fair market value, which might not seem a lot, but for very, very early stage, I think it proves that you can also make money out of this combination, especially on this very broad base of investments. So how would you do this? Okay. So what are we talking about? I think we'll cover this pretty quickly because it's been said already many times. But this is one of our companies. It's called Biogenera. This is a guy from the University of Bologna that started together with us with a patent, and it's a patent for pediatric cancer. It can cure 70% of pediatric cancers. It's an orphan drug because believe it or not, although there are 15,000 young children below the age of 3, this is not broad enough to be considered by big pharmas. So we started by investing an initial amount of money together with a few angels, and then this grew over 3 rounds of investment, and there are over 50 angels involved. There are now other venture capital firms involved. It's over 100 million euro of valuation at the last round. And this is, I think, what we all think that knowledge-intensive startup and knowledge-intensive companies are about. But what a lot of people don't know is what are we talking about? Is this something that it's a nice to have or it's a need to have? A lot of people think that this policy of having this kind of high-growth companies, knowledge-intensive startups is, every region wants to have that, but then there is only one Silicon Valley, and then we're not Silicon Valley, and then why do we do this? It's a thing for policymaker, or is it really something that can change our economies and improves our economies? And I'll give you just a couple of slides which are impressing me. One is the job creation in the States in the last 30 years. This is from the Kaufman Foundation. On the light gray area, you see what kind of job creation new companies have done. And on the dark gray, you see what kind of job creation existing companies have done. So apart from a very few years, you can easily see that new companies are creating about 3 million jobs every year, and existing companies are losing jobs every year. So having new companies and stimulating new entrepreneurship is important. But how about knowledge-intensive entrepreneurship? Well, this is again from Kaufman, is the high-growth firms and the future of the American economy. It's a study that was done a few years ago. 1% of the top new companies create 10% of the new jobs directly, but they create, even more importantly, 40% of the new jobs indirectly. So when you are talking about this 1 or 2% of knowledge-intensive companies, which might seem really a niche and might seem really nice to have, then you should look at this number and think twice, because this is really something every region should have. And I'm glad to hear that the region here in Twente and Enschede is one of these regions, but that's probably not the case for the whole of Europe. And I have to give a European view, so take me as a reality check from all the good things we've heard from the US. I think Europe is a bit different from this perspective. Another data, not from the US but UK, this is called the Vital 6%. It's a study done by a foundation in the UK called Nesta. So on the left, you see the total number of companies, and in deep purple, you see the 6% of companies, and on the second column, you will see, again on the deep purple, the amount of jobs that the 6% of companies create. So between 2002 and 2005, 6% created about 65%, and still in 2005, 2008, 6% were creating over 50% of the jobs. So that's why we are here, and that's why we focus on creating this company and making them successful. But how can we have more of these companies? Well, I think two things are important. The first is culture, and the second is money. So what do I mean by culture? Entrepreneurship and innovation. Maybe, the Netherlands, again, probably is better than the average in Europe, but we have to be conscious about what is happening in Europe. That's a young kid at school, and what he will look like when he will grow old. We will look like all of us, dressing with a nice tie, and having a nice job maybe in a large company, and then we talk about these knowledge-intensive companies and entrepreneurship, and then some of us has to do it. We cannot be all talking about this. So when it happens that you are the one pushed and say, just do it, then you start saying, but why me? And I show you what are the statistics in Italy. This is the who is who map. So these are the 6,000 most influential people in our country in Italy. Maybe for the Netherlands it's slightly different, but believe me, it's not so different. So out of the most influential people, 45% are professionals. So they are engineers, doctors, notaries, and these kind of things. And I'm an engineer, and I happened to graduate summa cum laude in a good university and went on doing a master's degree in Imperial College. So when I say this, people look at me in a certain way. But if I say I'm an entrepreneur, then there is a completely different perception of who is an entrepreneur in our country. And I think probably this is not so different in other European countries. The number two is politicians. We have hundreds of thousands of politicians in Italy, and 25% of them are the most influential people in the country. Look at number three, sportsmen, and entrepreneurs only come at 4%. So we have only one entrepreneur every 4 sportsmen, like, football player, nothing wrong with that, but, that's what the situation is like. If you ask, better work performance should mean higher pay, I think it's an obvious statement. Of course, if you are better than someone else in your work, you should earn more money. 90% of the people disagree with this statement in Italy. But these are the consequences. Now, that's a joke, but look what happens when you lose being an entrepreneurial continent. Look at Europe. This is Europe. This is a bit more complicated. Let me take 1 minute to explain. This is Europe, emerging country, United States, and it goes from before 1775 until today. These are the Financial Times Global 500 companies. So, and this is when they were created and where they were created. So look at Europe. Still, there are existing companies that can trace back their roots, still Global 500,000 today, they still can trace back their roots in Europe before 1775. And Europe has been the dominating force until 1875, 1900. And then look at the last century. about losing the culture of entrepreneurship. Look at how many global companies we are able to create. Maybe Philips is an exception, and I'm glad for the Netherlands. But when you look at the European view, this is what is happening when we lose the culture of entrepreneurship. So my number one message is that we need to be much more entrepreneurial. We need to give our young generation the perception that becoming an entrepreneur is not the last resort, it's the first resort. And if you fail, it doesn't mean that this is going to ruin your life. You take a calculated risk. Entrepreneurship should not be about too much risk or reckless people and so on and so forth. You take a calculated risk, you do your company, you fail. Then you may become an employee or you may do your second company. It doesn't matter. But the culture of how do we perceive entrepreneurship is very important. The second thing is money. And my personal experience of the last 15 years is that it's a great possibility that we have in Europe to couple all this public funding that we have from all these development agencies, structural funds, a European investment fund. You will have a lot of this in the Netherlands as well. When it comes to the very, very early stage, coupling this public money with a seed at least of private money. Because public money alone, managed by the development agency, sorry, it doesn't work. The results are disastrous. Now we have clear results from the last 20 years of investing this kind of regional money with public functionaries, and it just doesn't work. So you have to put together to public money some private investors that will really make this money to work. So why angels? This is again from the US, but we don't have data in Europe, consolidated like this, but probably they're not so dissimilar. This is the number of deals that are done by angels versus the number of deals that is done by venture capital in seed, early, and expansion. So look at startup and seed. 309 deals done by venture capital and 20,000 deals done by angels. I can accept that the deals done by venture capital is a little bit higher in terms of amount of money, but still, who moves the market are the angels. These are the 20,000 deals that are done. So that's why we focus on co-investing with angels. And that's why I spend personally a lot of time creating also angel groups. This is my angel group. It's called Italian Angels for Growth. When we started, we were 9 founders. We said, we put 100,000 euro each for the next 2 years on the table. Then we went on the market. We said, okay, we have 1 million euro. Who is coming? And people started to come. And we co-opted new angels and new angels and new angels. And today, if you look at our website, we are about 150 angels. And we have invested over 35 million euro in the last 6 years. That for an Italian angel group is not bad. And if you look at co-investment, this is a lot more. So it can be done. And then the other thing that we've been working very hard is co-investment funds. Because, as I said, you have a lot of this public money. And it's great when you can couple this with private money. And you can leverage this private money 2 or 3 or 4 times. So we created this kind of co-investment fund. This is the one in Emilia-Romagna, and we have a portfolio of 15 companies of all kinds, and of course now fair market value is getting better and better as we are getting better in our job. What is next, and what is next, I think, in a European view especially? Let me give you a couple of examples. This is not my last presentation. I just sent it this morning, so I apologize. There is one slide missing. But one example I wanted to give you is, especially from our Business Angels Europe perspective, there is a new initiative called Angel Fund in Germany between the German Business Angel Network and the Dutch Business Angel Network. And basically what this is doing is taking the best Dutch companies into the German market and fundraising also into the German market with German angel investors. And this is the PICO Fund. It's even a broader, if you like, initiative. So this is really pan-European. It's a new venture fund that is being created together with the largest angel groups in Europe. And here you see some of them, like London Business Angel, Paris Business Angel. Next stage, you will recognize some of them are also from the Netherlands, the Portuguese, the IESE from Spain, Italian Angels for Growth, and so on. And basically what we are doing, we are putting together all these angel networks and leveraging on the power of the network. So when a company that is funded, say, in the Netherlands wants to grow in Europe, then they will have the best angel groups that are the best positioned to provide business contacts and commercial contacts to enter a country. When you want to enter into France, believe is much better if someone from Paris Business Angels has put some money together with you into the company, and with their 200 angels is helping you growing into France. And we need to lower the barrier of growing, big companies inside Europe. It is, for us, I mean, I think that the reason why we're losing so much competitiveness in our entrepreneurial capacity to create big companies is really because it looks like we are creating even bigger barriers rather than lowering barriers. So the PICO Fund, it's one of the solutions we believe it's going to be solving the problem. Thank you very much.
So, in the interest of time, though, we do have time for one quick question. Does anybody have a question? Nico.
Oh, Nico. Thanks. Luigi, you talked about that Europe is losing its entrepreneurial spirit, and that probably is something cultural as well. We're losing entrepreneurial culture. What is the most important thing you think that needs to change to get back this entrepreneurial spirit in Europe?
Well, I think this is not a short-term solution, unfortunately. I think it's about education, is what I was saying. I think, we really have to educate our children and our, young teenagers to understand that, this has not always been the same. Europe used to be extremely entrepreneurial. We were the one going out and looking at other parts of the world. So I think we have to go back to that spirit. I mean, when you look at, I don't want to make it political, but look at what we're doing now. It's this kind of protection that we want to do is, raising barriers even within European countries. I think we completely missed the global perspective. If we do this, our markets are going to be even smaller and smaller and smaller. Our internal power to be a player, in the global market is going to be even reduced. And so the only thing is, progressively have more and more people that are embracing the entrepreneurial venture. I am slightly positive when I talk to a lot of researchers. When I started, I didn't say that I was a researcher myself, and I had a software company. Then I sold my first software company a few years later. And talking to researchers today is different to talking to researchers 20 years ago. Really, and universities also 20 years ago were very different from what universities today, and probably, again, Twente is the most entrepreneurial, so good spirit. But you really need to, just educate people. I mean, entrepreneurship can be taught as any other thing. It's just a matter of how important entrepreneurship is with respect to other things.
Thank you. Great, thank you. Okay, so, Carlene? Okay. Carlene Rodi? Rodi?
Yes.
Okay. Alternative investment. This is going to be interesting.
It's about alternative finance, but investment is part of it. Thank you, Ray. I'm working for Crowdfunding Hub. Crowdfunding is a very popular term, but basically we are focusing on alternative finance. And it's a lot more than just crowdfunding. It's also about invoice trading, etc. I think the basic characteristic of alternative finance is that it's making use of online platforms. So that's one of the basic features. Crowdfunding. For now, I want. Probably you heard of Kickstarter, Indiegogo, etc., the Pebble Watch. Forget about it now, because I'm going to talk about equity crowdfunding. That's a new kid on the block, I should say. And there's a lot of going on with regard to equity crowdfunding. Kickstarter and Indiegogo were very important for getting the term crowdfunding introduced to the general public. But this is a very recent study that only 40% or less than 40% of Americans have heard ever of the term crowdfunding. And the other way around is to say that not even 60% have heard about the term. So it's a really, people like us sitting here, we know about the term crowdfunding, but there's a lot of people not knowing about anything about this kind of new funding. For now, if we talk about Kickstarter, Indiegogo, etc., we talk about reward-based crowdfunding, but there are in fact 4 flavors of crowdfunding. It's donation-based, reward-based, lending, and equity-based crowdfunding, and they have total different aspects with regard to the motivation of people to take part in crowdfunding. If you look at the donation-based, well, it's more social interest. If you look at the reward-based, and it's more about pre-sales, like the Pebble Watch. You want to have the watch even before it has been produced. So it's this kind of the spectrum at the bottom. And then we have the more financial interest, lending, equity-based crowdfunding. If you look at crowdfunding or alternative finance, then you see that the UK and the US are really leading the way. If you look at what is happening in the UK, they are doing more than the whole of continental Europe in totally is doing. So this is, they are taking the lion's share of everything what's going on in crowdfunding here in Europe. And the same goes for the US. It's far more bigger than what's happening here. So for us, I work for Crowdfunding Hub. We are a research center. We do a lot of research, and then we look at the United States and UK, and then we know what will be happening in the Netherlands for the next coming 2 years or so. Of course, not everything will be the same, but what is happening in the UK is very important. There are 2 very new reports. There's research done by Cambridge. They are doing a lot of research at the moment, so we are working with them together on a new report on continental Europe. They will publish it, I think, within a month, but for now we have 2 other reports from UK and US. And I want to show you some statistics from these reports because they are really interesting. This is the UK, this is a report, this is, I think, it's published in February. If you look at reward-based crowdfunding, it's the fourth row from the bottom up. It's only 42 million pounds. So this is what the people know, reward-based crowdfunding, Kickstarter, Indiegogo, it's only 42 million pounds. If you look at consumer lending, then it's far, far more big. It's at the top. But if you look at equity-based crowdfunding, it's also very a large part of the alternative finance industry in the UK. So basically what we see here is that the focus is far more to the lending business than on the reward-based crowdfunding business. These are also some stats from the UK report as well. If you look at equity-based crowdfunding, it's the second fastest growing sector. It's almost 15 or more than 50% of all investments in startups already. If you look at business lending, 12% of the market for lending to small businesses is already done by alternative finance. So it's not the banking industry anymore, but it's the alternative finance industry who's servicing the small businesses in the UK. This is a nice figure. If you look at the blue line, it's equity-based crowdfunding. 5 years ago, it was less than 2 million pounds. Now it's 245 million pounds. If you look at the red line, it's total seed stage and venture stage equity investment. And if you look at the proportions, it's really shifting. So, the crowdfunding is still in its infancy, but if you see the growth rates are very high, of course that's easy, because if you start at 0, then you grow fast, of course, but it's really already a big share of the total seed stage and venture stage investments already. This is a figure from the report on the Americas. So this is, I think, 5 weeks old or something. Something is important is happening if you look at the alternative finance industry. If you look at the top, there the peer-to-peer consumer lending is 70%. This is all about refinancing credit card debts. So this is not about investing in startups or whatsoever. This is consumer-based lending, refinancing credit card debts. But what's more interesting is you see the terms marketplace and balance sheet at the left of the sheet. This refers to the fact that there are many financial institutions that are funding those online platforms. And if you look at the terms peer-to-peer, crowd, they do not apply anymore because the growth in volumes of the alternative finance industry comes from the financial institutions. There's a lot there's a lot to say about that, but I will skip it for now. But it's important to notice that not all the growth is from the crowd itself. In America, in the United States, this was an important month because 2 weeks ago new rules came into effect for equity crowdfunding. This will mean a lot also for the volumes in equity crowdfunding in the US. They provide, there will be new opportunities for a new type of investors and a new type of entrepreneurs. Sometimes it is referred to as the leveling effect of crowdfunding or the democratization of crowdfunding. And I think this is very important to know, that new type of investors, but also new type of entrepreneurs will enter the business. Some facts that research shows that women tend to do better when it comes to crowdfunding. This is about the way women communicate. They're better in storytelling. And if you look at crowdfunding, what's important that you have a really good story on a website. Video-based, audio-based content on your website is very important. And this is a different also. This appeals different kind of investors as well. So what I say here, the importance of appealing to the heart is as well is at least important as appealing to the head. So this is a new phenomenon, I think, in part of an investment scene. But we don't know a lot about equity crowdfunding yet because it's still in its infancy. And at the moment, there's a lot of fuss about an equity crowdfunding campaign in Belgium. There's a new journalistic concept. It's called New Monkey. They have been crowdfunded 2 years ago, and now they have a real a discussion with their original investors. And it's very interesting to see how these discussions will develop in the next future. What I want to advise the entrepreneurs in the room, reward-based crowdfunding is still a very, very important way of getting your business funded. Because it's an easy way to fund your business, but it's also it has large benefits with regard to market activation. If you want to know if your product will be sold, if you do a reward-based campaign, we have an early warning system if you are going to succeed or not. And even corporates like Sony are making use of reward-based crowdfunding just to see how the market will react on the products even before they start to produce these products. So.
Thank you.
So, any questions? Well, again, one question. Anybody? Give me some. Let's see.
That's a hard job. No.
Europeans would kick it, right?
Yes, thank you very much. I'd like to appeal to you, because you said you not only appeal to the head, but also to the heart.
Yes.
I'd like to also appeal to the heart. I've just started this year a company called Climate Neutral Building. And I'm looking not for money, but I'm looking for new ideas to integrate in new building concepts. So I'd like to ask you all to email one great idea you have selected from all these people, so I can integrate this in my new building idea. So this is a chance of a lifetime. I'll take it by this time.
Thank you.